Hi there, welcome to Kneppy Invest. On my journey so far to cover every single company on the ASX that releases cash flow positive June quarter, I have discovered quite a few interesting companies I didn't know existed. And even those companies I did know exist, I have found some things that are quite interesting. And today's company that I'll be focusing on is no exception. In fact, this company is the sort of company that has very low margins. So they have quite high revenue, over $200 million of revenue. But because they have really tight margins, not a lot of that revenue goes to the bottom line. So very weak cash flows and very low profits. And that's why you'll see the valuation of this company be quite low, even though they do have high revenue. However, when I looked at their cash flow from the previous half yearly, so the trading 12 months of cash flow, something did stand out, and that was the amount of cash flow for that half year when compared to historical levels. And I instantly, when I saw that, there was an instant red flag that did pop up. And it seems to me that Millennium have used JobKeeper to pay down their debt. Now, I'm not accusing Millennium of doing anything wrong. Maybe they can do this, but if they are allowed to do this legally, that just shows you there is something, or there was something wrong with JobKeeper, that a company can use it to pay down their debt. So let's explore this little topic by looking at this company's Appendix 4Cs over the last few quarters. The reason Millennium have quite tight margins is because the services they run, cleaning and security, historically have very low margins in itself, because when you do those sort of services, you're relying on labor, a lot of labor, to bring in that revenue. And that's the main reason I'm not too enticed by companies that employ a lot of people. That's sort of a paradox, because as a society as a whole, we want as many people to be employed as possible. But when you're an investor, those sort of companies that do employ a lot of people, for instance, Millennium Services Group, and they use those people to bring in revenue, they are affected by fairly tight margins. So you need a lot of revenue to bring in some profits. Market cap of Millennium is only $30 million, and you can just see their revenue for the trailing 12 months was 257. But when I looked at the operating cash flow of during the last 12 months of 35 million, that did raise a red flag. And I'll show you why that raised a red flag when we look at their financial history over the last 4 years. They also have $10.4 million of debt, so that has come down a fair bit. So they had quite a bit more debt than that 1 year ago, and I'll show you why I'm a little bit curious about whether Millennium did use JobKeeper to pay down their debt. If you do want to have a look at their Appendix 4C that they released for the June quarter, they released that on the 16th of July. The market was excited by the release of that report. In fact, the share price rose 20% just after they released that Appendix 4C. They released it in the late afternoon, like 3 p.m. So I usually miss those sort of reports that are released that late, because typically between 10 and 4, when there is trading, I detach myself from the ASX. The fact that I saw the cash flow, or operational cash flow positive of $35 million for the trailing 12 months, it did pique my curiosity. And I wanted to see, how did they get that amount of cash flow into the business? And not only that, how can you justify that amount of cash flow when a market cap of the company is 35 million and the enterprise value is like 45 million? So obviously that cash flow was not sustainable. It was more than likely a one-off. So I went back to the half-yearly report to see if there's any clarity in the cash flow statement in the half-yearly, and we do get a fair bit of clarity when we go through this. So receipts and customers for the half year, Millennium received 146.8 million, and just below that, there's a receipt of government grants of 31.7 million. And they do have a note 4, so we can go further in the financial report and look at note 4, and that would tell us what this receipt of government grants is. And also, too, below that, we do have an incremental wage top-ups associated with the COVID-19 government grants. So that's sort of a giveaway as well. Now, in the previous year, so I really like how in financial reports they have the current year, and then right next to it they have the previous year. So you compare how the company is doing compared to the previous year. And then previous year, this was pre-COVID-19, and Millennium was actually operational cash flow negative. Receipts from customers in that year, or for that half year, 146.7 million. So very similar to the previous half or the next half year. But payments to suppliers and employees was 150.8 million. So Millennium was operational cash flow negative by 5.7 million in that half year. So let's go back, or let's go to note 4 and see what that says. And in note 4 it says, for the period ended 31st of December 2020, the group recognised government grant income of 24.7 million as part of the Australian government COVID-19 relief measures via the JobKeeper program. And they also mentioned total cash receipts for the period amounted to 31.7 million, including 7 million receivable at 30th of June 2020. So yeah, most of the government grants was because of the JobKeeper program. So what did they do with that 31.7 million? Well, let's have a look to see what this company did. So we know now that the company received over $30 million in JobKeeper money from the government, and I don't know how the JobKeeper is supposed to work, but maybe I'm making assumptions here, but my assumptions would be that the JobKeeper money should be going to the employees of a company so they can keep their jobs and they don't have to work but still keep their jobs. That's the way I thought it would work. But it seems like Millennium didn't think that way, and maybe the government did expect JobKeeper money to be spent that way. Because when we look at the liabilities and loans for Millennium Services Group from June 2020 to December 2020, we know, or we can see, a considerable reduction in the borrowings of this company. So this is from their half-yearly report, looking at the total facilities up the top. So it went down from 45.33.8 million, but that's not where we're really focusing on here. We're looking at the used at the reporting date. This is what their borrowings were at the June 2020 and then at December 2020. So at the June 2020, end of the last financial year, they had $35.7 million of loans. And at December 2020, 31st of December, they had $10.961 million of loans. So they decreased their loans by $25 million, which is awfully close to the JobKeeper money they received from the government. Before we look at the June quarter Appendix 4C for Millennium, because the whole point of me doing this video is because Millennium were operational cash flow positive for the June quarter. So I just want to go back in time to see what happened in the March quarter. And in the March quarter, they received $78.8 million of receipts, and they're only operational cash flow positive by $1.2 million. And that's the sort of thing I expect from this company. Very low margins and not a lot of that receipt from customers going down to the bottom line. And you can see just next to the current quarter numbers, you have the year-to-date 9 months. And the receipts from customers for the first 9 months of the financial year were $225 million, and they were operational cash flow positive by $30.3 million. And the whole reason they're operational cash flow positive was because of government grants and tax incentives of $31.7 million. If they didn't receive that government grants and tax incentives or the JobKeeper program, Millennium Services would have been operational cash flow negative for the first 9 months of the financial year. And more importantly, if they didn't receive that government grants and tax incentives of $31.7 million, they wouldn't have the means to pay down their debt like they did. However, in saying all of that, it does look like things could have been turning around for Millennium Group in the June quarter. Receipts and customers in this quarter were $80.96 million, and more importantly, they were operational cash flow positive for the quarter of $10 million without receiving any government grants and tax incentives. In fact, the end cash in this business was up to $7.3 million, which means the enterprise value has dropped from $45 million to about $38 million. And with the market cap of the company about $35 million, you could start thinking maybe this company is looking a bit cheap at these prices, particularly if they can maintain this sort of cash flow moving forward in subsequent quarters. And the question is, can they do that? Well, let's explore that question in the next few slides. Thankfully, Millennium answers that question from me in their report. And it all comes back to when they pay wages. And they describe this really well in this little bit of commentary right here. So they say the net cash generated from the group's operating activities amounted to $10 million for the quarter. The number of fortnightly pays can alter across different quarters, which is the predominant driver of changes in operating cash flows across time. So what they're saying is, because they employ so many people, the amount of fortnightly pays they have in one quarter will determine how operational cash flow positive their quarter is. For instance, in the June quarter, they had to pay one less fortnight, which amounts to about $10 million. So it says in addition, the June 2021 quarter was also assisted by some favorable timing differences in cash collections from customers at year end. So not only did they have to pay less wages because there was less fortnightly pay periods, there was also some timing difference in cash collections from customers. So those two things added together was the reasons why this company was highly operational cash flow positive for the quarter. And they've even mentioned this will not continue into the September quarter, with the last line here: the September 2021 quarter will have one additional fortnightly pay, and that additional fortnightly pay is $10 million. Let's talk about the financial history for Millennium. This goes back to 2016, the second quarter of that financial year 2016. I haven't really been following this company too closely, simply because the margins of the business are quite pathetic. And you can just actually see that with this simple graph, looking at revenues and operational cash flow. Revenues throughout all these 6-month increments or periods is over $100 million, yet the operational cash flow typically is less than $6 million, except for the half year where they received JobKeeper, which put a little bit of a boost up the operational cash flow. So the margins in this business are really, really low. And a couple of half years here, in fact, they were operational cash flow negative. In fact, the half year where they received the most revenue, $153 million, they're actually operational cash flow negative for that quarter. So I don't know why. Maybe it was very low margin business they were acquiring. And in fact, I do remember the CEO mentioned they are trying to get higher margin business, but that's going to be hard to do with the sort of business they are running. So cleaning and security are typically very low margin sort of businesses. So it would be interesting to see how they're going to get these higher margin customers or clients. When we look at the weekly chart for Millennium, going back to late 2015, not the nicest looking chart, particularly from that late 2015 period to the middle of 2019. Share price fell from around about $2.30 or so at the start of this chart when they first appeared on the ASX to a low of about 15 cents in the middle of 2019. Nice looking downtrend from the middle of 2017 to 2019. So about a 2-year period where the share price fell off a cliff from about $1.70 to that low of 15 cents. And ever since that low of 15 cents, we are starting to see a potential turnaround in the sentiment of this company. Share price has been creeping up slowly. Current share price is in the 60 cents range. So it's been a four-bagger in about 2 years, or just over 2 years. We have seen a little bit of volatility in the share price, particularly around the COVID-19 financial panic. If we do away with that panic period, when the share price went from about 55 cents to about 20 cents or so, if we do away with that and just move it out, we do see a potential new uptrend developing. So that's just looking at the weekly chart. At this point in time, there is potential in this company if management can succeed increasing the margins of the business That's probably the most important thing that this company or the management of this company have to do. Lots of revenue, but that revenue is not going to the bottom line. And even though they were highly operational cash flow positive for the June quarter, there are some logical reasons behind that, and those reasons suggest that sort of cash flow will not continue in the next quarter. My plan of attack over the next few days is to do a couple of videos, one on Westar Industrial. They did release their quarterly cash flow report, which was very positive, and the market has responded to that quite well. In fact, they've just gone into a trading halt because of a material contract they have to release to the market. And also, we'll do a video on Pure Profile. I've already done a video on this company about 3 months ago. I've also got here Legend Mining Limited. I want to touch upon their quarterly cash flow report because they do receive money through repayments of a loan they gave another company, and they put that into the operational cash flow part of the quarterly cash flow report, where I think it should belong in the financing section. So in fact, Legend Mining quarterly cash flow report does look like they are operational cash flow positive, but I would actually argue differently, because the money they received in repayment of loans isn't really money from operations, because this company isn't actually in operations right now. And that is all I've got on this video of Millennium. If you do have any questions about this company, maybe I'm completely wrong and they pay down the debt through some other means. Maybe they did generate a lot of cash in their business and JobKeeper was used for something completely different. I don't know how, because everything points towards Millennium using JobKeeper to pay down their debt. Again, that doesn't mean they did something wrong. Maybe they were allowed to do that. And if they were allowed to do that, I probably should say, it's awesome that they decided to pay down their debt, because debt is one of the worst things a company can have, particularly a company like Millennium. So if you do have any questions about this video, make sure you leave a comment in the comment section. I'll answer anything you have to say in the next few weeks. The last thing I should say is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.